the Moneyweb Crypto Podcast, where we discuss all things crypto related. Your host, Kieran Ryan.
What happens when banks embrace crypto as they are about to do, apparently? After years of cutting off crypto service providers from banking facilities, banks are now preparing to launch their own cryptocurrency offerings. Soon, account holders will be able to purchase Bitcoin and other digital assets directly through their banking apps. This will mark a major turning point in how traditional banking institutions view and engage with cryptocurrencies. It's ironic that banks are now falling in love with crypto. They spent the last decade or more ignoring it, then debanking crypto providers, and then quietly investigating how they could participate in what was clearly a phenomenon that could not be wished away. Expect to see a bunch of new offerings from the banks in the coming months. Now, this raises some important questions. Banks operate on a fractional reserve system, which means they lend money out deposited by customers. Not only that, they lend it out multiple times. Will they do the same with your crypto? Well, to answer that, we're joined by Frank Leonetti, founder and CEO of crypto exchange Afridax. Hi, Frank. Thanks again for your time. I see you are anticipating a big move by the banks into crypto in the coming months. Why, after they were so hostile to crypto for so long, are they now making this move?
Hi, Kieran. Thank you for having me. They certainly have been hostile to the crypto industry over the years. They debanked traders, they debanked exchanges, and you couldn't even buy crypto through a credit card. If you tried, you would be declined. So they were very hostile towards the crypto industry. And I would just like to say that it wasn't all of the banks. It was most of the banks except for Standard Bank. They really embraced the crypto industry, and they need to be commended for that, because had it not been for Standard Bank, we wouldn't have accounts of crypto exchanges today in South Africa. So, but the majority of banks, thought that crypto was too risky, and a lot of scams would, impact their customer bases, and they just didn't understand it, and they just didn't know how to control the crypto industry as they would now. And I think in terms of changing their stance, Bitcoin and crypto assets have proven to be a worldwide phenomenon. And it's mainstream now. Bitcoin cannot be ignored, and it's certainly embraced by governments, certain governments around the world, and corporations and day-to-day investors. And banks have seen that and, decided, well, look, we need to change. And what's really given them the ability to change is the regulatory framework that's been laid down by some countries. And they've paved the way for them to enter into this market. And I think we should probably see in the next couple of months a few banks entering in and offering those services, as you mentioned.
Now, there is this issue of fractional reserve lending, which I touched on earlier. Explain for people who don't know what that is, what it is, and will the banks be on lending our crypto, not once or twice, but multiple times as they do with our deposits, our cash deposits?
Yeah, so banks use a fractional reserve system to expand the money supply through lending. For example, if a bank has a 10% fractional reserve and receives a deposit of 1,000 Rand, the bank can lend out 900 Rand to another institution. And that institution then can lend out its own fractional reserve. So, for example, they'll lend out 800 Rand and essentially continue down the line like that until there's no more money to lend out. So 1,000 Rand can create a money supply of, say, 10,000 Rand. And it's all based on debt. And if that was to happen in Bitcoin, and institutions started doing this, it could possibly impact the price of Bitcoin and the perception of there's more currency in the marketplace than there actually is, more coins in the marketplace, if you will. And if the banks adopt this and they default, if there's a default somewhere down the chain on the debt, it could be quite catastrophic for the banking system and obviously ultimately for the user. And the reason why I say that is because there's no mechanism that a bank can be bailed out if they lose their customers' crypto. Governments can't print Bitcoin like they do fiat. So, right across the world, when we've seen these banks collapse, the government bails them out. Now, that won't be a case. So I think, hopefully the banks won't engage in that, and they will maintain a one-to-one asset ratio for their customers all the time and not, try and fractional reserve it. Certainly if there's a run on the bank and they don't have that liquidity, there's going to be issues where you won't be able to withdraw your funds simply because the banks won't have it. So those are the risks that customers can face when banking crypto with the bank.
Right. This is not particularly new in global terms where banks enter into the crypto space. But from my understanding, the banks that have done so, the bigger banks overseas, they're really just offering their customers a way to purchase Bitcoin. But do we know anything about the way that they are treating that Bitcoin? Are they lending against that, or are they just custodying it for the customers?
Well, I would assume it's mostly custody at this particular point in time. And, there is exchanges and institutions that do, offer margin trading on their platform where they get their customers to lend that crypto to those liquidity pools. And they do earn a large percentage of that return. But that's consensual for that customer to do that, to understand the risks. And I think, it's almost like having a loaded gun and when you can do fractional reserve and you say you won't do it, but you have the ability to do it. You have the licensing to do it. You have the banking license. So we don't know. As you say, you mentioned earlier, the banks have been very secretive and very against crypto in the early days. But now, with the regulatory landscape, they can pretty much do what they want. If they wanted to introduce that, I don't think there would be issues from a regulatory perspective because they're already doing it in the fiat currencies. So I think we could start to see some of that. But I don't know for sure at this particular point in time. Around the world, there hasn't been much of it, but it is a concern for the crypto industry as a whole.
Right. There is one Bitcoin bank, that's Zappor Bank, based out of Gibraltar. They don't do fractional reserve lending, which means that if you deposit your Bitcoin with them, they're not going to lend against that. So they're giving you custody, very safe custody, and they're also giving you a slight yield on that Bitcoin that you have with them. But they've done that deliberately because they understand the ethos that was the foundational pillar of Bitcoin when it was developed 15 years ago. But this is a game changer, isn't it? When the banks start entering in here, a lot of the early adopters of Bitcoin, they did it almost as a protest against the fractional reserve system. And a lot of new adopters, a lot of bank customers will find out that they can buy Bitcoin through their banks. They may not know the history behind this. Do you see this as a potential threat to exchanges, that they now have this very, very large potential competitor?
Well, absolutely. Just referring to Zappor, the crypto industry is quite small and, the blockchain is public and, you can certainly do quite a bit of investigative work to find out if that is the case with fractional reserve lending. So any, savvy sleuth who understands blockchain can engineer these kind of things. So I think Zappor has realized that it would be severely frowned upon by the crypto community if they did fractional reserve it. We don't know if we're going to see that trend continuing with traditional banks going forward. But to your question, Karen, definitely will impact the exchanges. Banks have got very deep pockets, marketing budgets, and they certainly do have massive clients, lists that they can, target through their platforms. They have the audience of the country, so to speak, through a handful of banks, and they would be able to reach customers more easily than a normal exchange would.
Right. Would that not also encourage a lot of exchanges to move into the banking space, which they are kind of doing already? They're offering payment services. They're offering on-ramps and off-ramps into the crypto market. The range of services, I think this is what they call the neobank. This is this new type of bank, which is going to be the bridge between fiat and crypto services and rails. Do you see that as a potential?
I definitely do. Crypto exchanges are evolving. They're definitely seeing the need to offer payment solutions. We know that there's Pick and Pay. You can buy your groceries through your app, with Bitcoin. And, exchanges are, evolving to the point where they are becoming bank-like. And most banks have always seen exchanges as a competing bank because we do custody our customers' funds and we do offer solutions where they can pay. And I think it's widely available now, these solutions on various crypto platforms. So we would enter into their space, they would enter into our space. It would be, par for the course, I guess.
Do you see any other potential threats coming from this or concerns that you might have about banks entering into the space?
I think you mentioned it earlier. Cryptocurrency, specifically Bitcoin, was invented to circumvent the banking system. Bitcoin is peer-to-peer based. In other words, you can transact person to person without the permission of a bank. And that's been, the fundamental difference between, the fiat system and the new crypto space. And banks are starting to force themselves as intermediaries again and causing a form of centralized trust, just relying on people's inability to understand the technology. It could be a problem, and it could be anti-crypto, if you will. Let's hope they, provide sufficient educational information to its customers so that they can self-store. I do believe that, every person who's involved in crypto should learn how to store it. And there's this age-old saying, not your keys, not your Bitcoin. So if you don't own the private keys, you don't technically own the Bitcoin. And if the bank owns the private keys to your cryptocurrency, then they can shut your account down at any particular point in time. Let's just say, for example, you haven't refreshed your KYC cycle with them, and then they decide to close your account, or they put your account on hold and you don't have access to those funds. So those are the concerns that the industry would be, looking at.
I mean, I think there's an interesting point that you raised there about the ability of the banks to effectively freeze your funds. We've seen that in some cases where they debank customers where they perceive there's a reputational risk. And that has happened in South Africa, and it's happened abroad as well. So if you perceive not to be behaving in a certain way, you could find yourself potentially in trouble. You see that as a threat. I mean, the banks are saying that this is very remote, but there are examples of where it has happened.
Well, certainly it has happened, and I think it would happen more and more if you really understand the regulatory landscape. The banks can freeze your account, withhold your funds at any particular point that they deem that you've acted in a suspicious way. And I think it just takes the power of your crypto out of your hands and puts it in the hands of a bank. And, you give them the authority to do what they want with your account. We've seen this across the world, specifically in Canada, when there was some, pushback against the COVID mandates that came through, where bank accounts were frozen because you weren't on the right side of the political argument of the day. And so those are the concerns that the crypto industry has always had, about banks coming into this space. But it's not only banks, it's institutions as well. Exchanges could do that as well. So, we don't want to pick on banks all the time. What we advocate is that if you do acquire Bitcoin or crypto through a banking platform or an exchange, it would be better for you to buy it and then store it yourself so that you don't have that risk.
Yeah, and there are some technical complexities in storing it yourself, but, you can navigate through that. And I think there are some technologies coming through that are making that a lot easier to do. But just thinking about, South Africa companies that have been debanked, the Gupta companies were debanked. Seconjulo, they brought a case against Nedbank and other banks as well, I believe, from memory. So we are potentially entering into new territory here where, if you are custodying with the banks, you might find yourself, if they decide that you're a reputational risk or something like that. In addition to which, you now have the travel rule, whereby the exchanges themselves have to notify the Financial Intelligence Center of any transactions of 5,000 Rand or more. So there's a lot of regulatory pressure coming to bear on the space, not so?
Yeah, exchanges are struggling right now with the regulatory requirements. The cost to an exchange is now exorbitant. And it really has caused some exchanges to completely change their focus and focus solely on regulation just to stay in the marketplace. And I think with bigger institutions, they geared up to deal with that. They can handle the financial impact of regulation much better than a smaller exchange. So, yeah, we are seeing, as and when crypto becomes more adopted, more mainstream, those regulations will tighten. specifically around the exchange control. We might see some regulations around there that tighten up quite significantly, which will impose restrictions on exchanges and banks in the same way that the fiat system is already restricted.
Do you see a potential period of consolidation in the crypto market where some exchanges are merged or bought out? Even the banks with their deep pockets, you mentioned that. They could be making bids for some of these exchanges.
Yeah, I think absolutely. The barriers to entry to open an exchange is exceptionally high. It's a massive technical footprint that you would have to get to grips with. And then operational experience. You'd need a couple of years of operational experience to run a cryptocurrency platform, specifically an exchange. And if you have been found flat-footed and you're not one of those institutions that has planned for opening an exchange or a crypto platform, your best bet is probably to buy out a existing platform with the technical stack as well as the staff complement that knows how to operate the industry requirements. So I do foresee that there will be some buyouts in the coming months, maybe in the next year or so.
I guess on the counter side, you could say that banks have a good track record in the custody of funds, of fiat. And that surely is an advantage to them when it comes to digital assets. And they will no doubt promote that to their customers. Look at our track record. Now, newcomers to crypto tend to be afraid of the potential for hacks and scams. And there's been a lot of noise about that in the media, although the stats are actually very much, if there are scams happening, it's mostly happening in the cash and in the traditional financial space. But banks are going to say that we're pretty good at managing your assets, and it's not going to be any different with crypto. What do you think about that?
I think that they would have very superior storage solutions, and they would have done deep research in the way that you can store Bitcoin and related cryptocurrencies. I think they have got the resources to do that. When it comes to fraud, I think the problem is slightly different. Most of the funds that get drained out are not a direct hack against the bank's internal systems. It's a hack against the customer, where there's SIM swaps, there's investment schemes, there's phishing, and people's accounts are compromised. That's been, largely underreported. Yeah, I think it's a massive problem in the country. And the exchanges know about this because most of the fraudulent funds that arrive at the exchanges is a problem that's happened in the banking sector, where a person's account has been compromised. So I think it's going to be different for banks because with fiat, you can sometimes reverse those transactions and you can follow the trail to where all the money's gone. When it comes to crypto, if that money's out of the system, it's out of the system. There's no ways that the banks can reverse that.
Yeah, and I guess that's an important point that people have to realize is that this is a permissionless environment that they're entering into with crypto. So if you send something to the wrong address, well, you've lost it. Sometimes it can be recovered, and there are services, chain analysis, for example, will help track that down, and there are instances where it has been recovered. But in most cases, I think it's gone, and that's something that they may be thinking that they'll be able to get through the banks because you can recover funds on occasion, most frequently, in fact, if you feel that it has been hacked. Not always, but sometimes. But with crypto, I think it's a done deal, and people will have to learn a lot about what services the banks can actually offer in this space, right?
No, I think the risks are going to be very similar to the crypto exchange. We understand the risks. We've been dealing with this type of risk for quite some time. It lends back to the operational experience. We've got sufficient warnings for our customers to, make sure what they're doing in the moment when they're withdrawing is the correct action. Because, one wrong move, you could lose those funds. You send it to the wrong address, or you fail to, you do things in a hurry, you lose that money. And I think that's one of the biggest challenges that the banks are going to have when people just don't pay attention to what they're doing and make those kind of mistakes. And like you rightly said, with crypto, it's a done deal. Once that transaction leaves the institution or their wallet, so to speak, there's no ways of recalling those funds. And in very small cases, can they be retrieved.
All right, we're going to leave it there. Thanks very much, Frank Leonetti, founder and CEO of crypto exchange Afridax. Thank you, Frank.
Thank you, Karen.
Thanks for listening to the Moneyweb Crypto Podcast, hosted by Kieran Ryan. To listen to our other podcasts, go to moneyweb.co.za or the Moneyweb app and follow Moneyweb News for daily updates.